Hi, welcome everybody back to Fresh from the Trollbox, the BitMEX Trader podcast, together with our CEO, Stephan Lutz. We're going to review the week. Stephan, how are you?
Hi, Uzi. Well, I would say fine. A little bit surprised by it's not a crash, right? But by the correction that we have seen tonight. Now the question is, where will it go? Will it go up or down? So we see Bitcoin price trending towards the lower boundaries. So depending on where you are, what you think, is it going up or down? And then the big question of this week, why didn't we see more price appreciation of Bitcoin? Although all the ETFs have been buying and the volumes grow, right?
Yeah, exactly. I mean, that's really what I'd love to talk with you today about is why are we not seeing Bitcoin smashing through every all-time high as I guess crypto Twitter predicted with the ETF approval. So do we want to dissect that a little bit and discuss why are we seeing in fact a downward trend since the approval, right? The approval happened at somewhere in the 44, 45K region. Then we had sort of a quick spike and an immediate fall down, which was the short-term reaction. But then now we see it slowly tickling down. Block clock says 41,400 as we speak. And do you want to dissect why is this happening? How can we explain this maybe?
Yeah, sure.
Did they all buy before? How did it work?
Yeah, maybe that will be a little bit longer. I mean, not really complex, but maybe counterintuitive in a way. And frankly, it's a little bit speculation here because I haven't looked into the books of all the players, right? But what you can see is, or what usually happens often for TradFi asset managers or TradFi linked asset managers, if they know already they're going to build up larger positions, right? For some of new products, new funds, etc., and even for the adjustment in the existing ones. It's not that one particular fund is buying something on the market. Usually you have a large asset manager like BlackRock or Amundi or Allianz Global Investors, you name them, right? They operate in a way that they have an internal trading desk that is doing all the trading combined for maybe not all, but the majority of all the funds that are managed by those companies. So that means it's, if I want to buy an S&P 500 ETF, it's not that in that particular incident, someone is going out and is buying either futures, forwards, options, or outright stocks of the S&P 500 and adds them onto the books of that fund. Actually, they always holding some amounts of blue chip stocks or second line stocks, right? Or bonds, what have you. And then depending on the demand for the, we call it in crypto minting and redemption of the fund fractions, they just get that out of the internal inventory. So that means it could be the case, just having that excursus. If you buy even large chunks of an S&P 500 physical ETF, no order whatsoever is going to the market. That can be even in the billions, right? It depends on the liquidity, on the size of the asset, total market cap, trading volumes, etc., etc. And I believe, frankly, that at least some of them will have built up some of the Bitcoin positions earlier, either outright in spot markets or maybe even through forward agreements with miners, right? I mean, you can do that OTC. It's not a big problem and no one notices it. You only notice it once it moves on the block, right? So you can see it on the blockchain where it goes. So what actually would be interesting is seeing an analysis of probably Coinbase custody and how the wallets develop, whether you had a ramp up of outright Bitcoin holding over the course of 2023, or whether you had a spike right now, which then gives you more or less an indication, not completely because not everyone is with Coinbase and there are other things happening on Coinbase custody as well, but it gives you an indication. So that no one has done. We all have looked at the trading volumes, right? And the issuing volumes. Number two, if you then assume that at least parts of those exposures have been built up over time already to then be transferred from that internal trading desk to actually the ETF itself, not leading to any huge or additional demand on the market, right? While supply is pretty high, I guess some of the miners will still sell at those levels. Don't forget we have halving upcoming, and not all miners are crypto maximalists, right? I mean, they don't mine all just to hodl their Bitcoin. They have investors that require USD dividends, USD payouts. They need to invest into their infrastructure, right? Even with halving. So they need to pay a lot in USD. So, and I believe that we still have kind of a sell-off on the mining side. So that might be like, okay, let's keep it where it is. And then you see Grayscale. Grayscale had a massive requirement for redemptions. And as they really go bit by bit and in the physical way, they needed to dump massive amounts of Bitcoin to the spot markets. All of that together basically gives you then where is the Bitcoin price together with where people like you and me are. Are we buying? Are we selling? Do we take some profits, et cetera, et cetera? So I believe it's a mixture of that. It's not just one. And the analysis haven't been done, frankly, by the market, even not by us right now, because it's more difficult to go into those numbers. It's a little bit more, I wouldn't say worrying, but what I find interesting, I'm not impacted. You know that already. I don't buy Bitcoin spot ETFs. I buy Bitcoin outright on my own wallet. But if I would buy a Bitcoin ETF, I would want to know where this comes from, because if you imagine, let's say I'm buying the ETF fraction, right? My part. And at that time, okay, Bitcoin is at, let's say, 41,000, and I get the Bitcoin ETF at 41,000, just making up numbers and oversimplifying. That's from a best execution policy perspective, okay. But if I know my asset manager has actually bought the Bitcoin already back in March 2023 at 16 or 18,000, frankly, I just gifted money to them. I just throw money out of the door, right? So which isn't a bad thing as such. It's just how life is. But it would be interesting to know. But we will only know much later when we see the financial audited accounts of all of those asset managers, whether they have something in their books and records there. You don't know. The only thing you can track is on chain the volumes, so assets under custody at Coinbase custody. Sorry, it's Coinbase custody.
Yeah, so that's interesting. You reckon? Well, they came prepared, and I think that's fine. No news, and certainly the internal desks have done a great job. Probably some parties in New York, and we're not these days. But then you could argue, right, the same can happen for their future expectation. So if they would have a price drop expectation, they would probably try and disperse. Do you actually think, and then I guess that shows a little bit your own expectation too, do you think that is happening, or do you really think most of the sell pressure is the Grayscale trust, which is, I guess, more forcefully selling than because they expect the price to drop now?
Maybe one step back. I mean, not back, but what I wanted to add is you can see that more TradFi volume is actually active already when looking at the CME derivatives volumes. Well, CME is not an exchange for people like you and me. I mean, I can't trade on CME outright. I always need someone in between. So actually, it's an institutional exchange only. And they have climbed up the rankings and the volumes quite massively. I mean, if I remember like a year ago or a little bit more than a year ago, they have hardly been in the top 10 of the derivatives exchanges. Now they rank consistently like number 4, 5, 6 after the behemoth of the industry. So, and that gives you that there has been TradFi activity in exactly those assets. So it could well be the case that those desks got some Bitcoin, they hedged it on CME, so they didn't make a lot of money out of that, but they had it already, and now we've seen that. So personal, it's really expectation. There is two things, I want to say one thing I look out for, and we can't say now. It is how much demand for those Bitcoin spot ETFs there will be. right? We have seen a lot of demand right now. We have seen a lot of trading, et cetera, et cetera. But the thing is always financial markets trade expectations. We had the expectation already. It's a little bit like trading an insurance against inflation, which we all speak about when speaking about Bitcoin. Actually, you need to buy that before the inflation comes, not when the inflation is there. If inflation is already at 7%, buying Bitcoin at that time doesn't make any sense. It's a little bit like an insurance policy for flooding. I mean, you need to buy the insurance policy for flooding years before a flood is there so that they actually pay you something. Whereas if you go after flood to an insurance policy, it's overly expensive and they won't compensate you for what has happened already. And here it's a little bit the same. So everyone expected that the Bitcoin ETFs will be approved, done. Which means the price appreciation happens before. Maybe there is then trading on the news at that day or at that week. And then the only question is there more demand for Bitcoin ETFs than expected or less demand? If there is more demand, we will see further opportunity for price appreciation. If we see less demand than actually expected or hoped for by the TradFi guys, we will see further selling pressure. So for me right now, it's more or less this finding a new equilibrium between Grayscale and the others. And this might lead to a little bit more selling pressure. I mean, again, no investment advice, but I'm a little bit gambling of at least scratching at the 40,000, maybe briefly dipping below. But of course, long term, I believe that there is more demand for Bitcoin ETFs and adoption of crypto as such, which is the big thing. I mean, this ETF thing in the history of Bitcoin and crypto, I think will be just one thing. I mean, this is not taking over the whole industry because then we can all work in TradFi. I don't need then to work at a crypto exchange. So I believe in something else, but it's nice. We had the news, it worked out, it is approved, but now look rather out for what the interest is in the broader public in Europe and in the US for those ETFs. If that is growing, if it will be sold, I mean, or distributed more widely, we will see more demand, which then drives up prices. We have halving coming up, so still positive, but short term, I mean, just being open, I'm short term, gambling a little bit.
It's not a gamble if you win. I think, yeah, we fundamentally agree. What it needs basically is economic news, right? The attention through the ETF was great, and Bitcoin was in all the newspapers. That always helps with attraction. But now that everybody knows about it, what determines next expectation is news, right? Beside of the halving and I guess economic development, there's one thing that Arthur Hayes highlighted in his last CTD, and I think that's also quite interesting, which is the repo repurchase agreement or reverse repurchase agreement, which obviously were a great way for the US Treasury to sell securities, and they've started that, I think, mid 2021. So certainly from close to zero, it became 2 point something trillion US dollars, and we've clearly seen that in the crypto markets, and then we've also seen when during 2023 they started to reverse that and kind of reduce liquidity in the markets, right? I think they're now somewhere in the 560 billion range, so they have basically taken out 75% of the market already, and we've seen kind of Bitcoin running the other direction, right? And obviously all of this ties into the underlying scheme of inflation, right? And liquidity, money prices getting higher again, and bank liquidity or general money supply and bank liquidity becoming lower again, which tends to help deflationary assets. So let's see how that goes. I'm just throwing it out here. It's a very interesting curve to watch, and certainly one of those economic data that I'm sure is to be observed for the next couple of months.
Well, definitely, but here again, it is not about what will the curve look like next year, right? And then acting. Basically, I always and regardless of in what direction you tend to look, right? I mean, you can have good arguments both ways, but if you tend to say, "Hey, I think that will happen," actually, you need to act now and get your insurance against it now, and not like, okay, when it happened, then I'll do it. I mean, this is not how it works.
Yeah, certainly, right. The inflation insurance is to be bought now, not in a couple of months when it's when you've paid the high price of money.
Yeah, I mean, you have the elections in the US upcoming, so people might want to receive something. I mean, not directly, it's not bribery, but it's like indirect. In Europe, I mean, they try to fight against the US and China in a way, so they need to keep people happy. And Christine Lagarde already hinted at interest rate reductions over summer, so. Yes. Watch out.
Yeah, it's the year with most elections in a long time, right? And generally elections are won by money spent. So let's keep that in mind too. Certainly, yeah, across the globe,
Bitcoin,
not just
Bitcoin. It's the year of the dragon. Huh?
It is. All right. With that, do we take a look? What's the next week going to be doing? And finish on this. So throwing the dice between buy, sell, 100x. Whoop. We get, I think you've guessed it a little. All right, hodlers and traders, this is what I said, sell. We'll see if that holds true, and then we'll throw it next week again. Until then, thank you very much, Stephan. Very insightful, and have a great weekend.